Thank you for joining me. Today I want to talk about tariffs, or rather, that's just a joke. I don't want to talk about tariffs. I just feel like I have to talk about tariffs. So, what are tariffs? Tariffs are basically taxes on imports, and different types of goods have different rates of tariffs. So that means a computer, for example, does not have to necessarily have the same rate of tariffs as beef, or a shirt, or shoes, or anything. So the taxes are paid by the importer, which means if you were to order something from China right now, you would be the one paying the tariff. Or let's say Walmart, for example, imports, let's say, $1 million worth of, say, shoes from China. They would have to pay the tariffs on shoes from China to the government, which means there's a port of entry for goods. It's complicated. Basically, they come in by container, and if we're talking about Walmart, they come in by full container. And then Walmart would have to pay the tariff before being allowed to bring the goods into the country. So what's the impact of that? The impact is, let's say Walmart now has to pay 10% tax on $300 billion of goods from China. Or the $300 billion of goods from China means $1,000 for every man, woman, and child in America right now. It's a little less than that, but you get the point. So that means that Walmart now pays the 10% to the government to be able to bring the goods into the country, and they will have to either eat the cost or pass it on to the consumer, which means either they're reducing their own earnings or they make the goods more expensive. And when we're talking about Walmart, that means the same thing really, because the Americans shopping have the same amount of money before and after the tariffs, which means they can buy the same amount of goods before and after the tariffs, which means that the 10% going to the government is either going to reduce the top line or the bottom line, or probably both. So generally what happens is that some of the cost gets passed on to the consumer and some of the cost reduces the profits, because you don't want to lose revenue at the cost of profits. Or rather, if you're losing 10% in revenue, you cannot make that up in profits either way. So they would have to raise prices by, let's say, 12%. So that would decrease their earnings even more. So what that means is the tariffs are hurting all the American companies that don't produce things, and that means don't produce generally the raw materials going into the goods. So let's talk about the tariffs on steel and aluminum imports, for example. There are very few companies in the US that actually produce steel and aluminum, and there are hundreds of companies actually using steel and aluminum. So you're hurting hundreds of companies producing goods to please tens of companies producing the raw materials. And even with the tariffs, America cannot manufacture shirts and shoes as cheaply as China. So it's not going to bring any manufacturing jobs back to the US. So what generally happens is, right now we're focusing on tariffs for China, and that means that people stop buying goods from China, or people stop producing goods in China and move the production somewhere else where it's probably even cheaper. So instead of producing shirts in China, they're producing shirts in Cambodia or a lot of other really low wage countries that likely even have less protections for workers and things like that. And the jobs are not going to go from a country where the hourly wage is $1 to a country where the hourly wage is $10. The more likely it is that the jobs go from a country with an hourly wage of $1 to a country with an hourly wage of 30 cents. It's just that moving production has a huge cost. So if you're going to move a factory from China, you're not going to spend all that money moving all that equipment or buying new equipment in the US, where you spend, thousands of dollars more for the wages. You're going to move the factory from China to, let's say Cambodia or Thailand or Vietnam or many of the countries around there. India would also be a good place. They have a lot of workers, but probably higher priced than the totally unskilled jobs would require. Either way, the jobs are not going to come to the US. They're just going to go somewhere else where there's no tariff. And the American businesses are still paying the tariffs. The American consumers are still paying the tariffs. And the benefits are, let's say, unquantifiable. So, that's all on tariffs for today. I hope you subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.